Hey yo, what is going on with the viewers of the tube? If you don't know, you should know that I'm the host of the only crypto channel in the space that can make the hidden connections better than this guy finding out the movie Pitch Perfect was about 9/11.
What do you think the odds are that the first competition in the movie would be in New York City? The Troublemakers, the all-male group, they do a choreography of an airplane. There's a sign in the crowd that says, "Acapella is my co-pilot." And the Bard and Bellas come out dressed as flight attendants. So then I went back and I started doing the math. So the Troublemakers come out and they have 9 guys. 9. Remember that number. Then the Bard and Bellas come out. They have 11 ladies. So Pitch Perfect is about 9/11. Great. Get in line.
You know how we Sherlock Holmes. It's time for Chico Crypto. Well, you don't have to be Sherlock Holmes to figure out that the traditional stock market, aka Finance 1.0, is going to be ready for a world of hurt. The signs are abundant, although if you just read the headlines of the mainstream news, you might not be able to see it, because they are the deniers, the ones who think, nah, the world is going to go back to normal, and industries won't be affected long term. But the true investors right now and for the past couple of months have been readjusting their portfolios, which includes abandoning stock in industries that will forever be changed by the virus, and that includes the airlines. It was found out over the weekend that the Oracle of Omaha, Warren Buffett, has sold all of his US airline stock. That includes every single last share in the airlines United, American, Southwest, and Delta. And these were no small positions either, in the multi-billions of dollars. Warren's Berkshire had an 11% stake in Delta, 10% each in American and Southwest, and a 9% stake in United. So why did Warren decide to pull the parachute and dip out on the plane industry? Well, he announced the decision in Berkshire's 2020 annual meeting. Let's hear what he had to say about the move now.
The airline business, and I may be wrong, and I hope I'm wrong, but I think it changed in a very major way, and it's obviously changed in the fact that the 4 companies are each going to borrow, perhaps an average of at least 10 or 12 billion each. Well, you have to pay that back out of earnings over some period of time. I mean, you're 10 or 12 billion dollars worse off if that happens, and of course, in some cases, they're having to sell stock or sell the right to buy a stock at these prices, and that takes away from the upside down. And I don't know whether 2 or 3 years from now that as many people will fly as many passenger miles as they did last year. They may and they may not. But the future is much less clear to me about how the business will turn out through absolutely no fault of the airlines themselves. But something that was a low probability event happened, and it happened to hurt particularly, whether it's the travel business, the hotel business, the cruise business, the theme park business, but the airline business in particular. And of course, the airline business has the problem that if the business comes back 70% or 80%, the aircraft don't disappear. So you've got too many planes.
Yes, it's obvious to me too, Warren, that airlines won't be the same for a long frickin' time. He even said up to 2 to 3 years. He doesn't know if airlines will be moving as many people as they did before the virus. The airlines, they have a problem. They have too many planes and not enough people to fill them for the foreseeable future. So Warren, he pulled the plug. But his words are oh so wise, as that applies to multiple industries. Warren, he mentioned a few: hotels, cruises, theme parks, and then later on in the conversation leaked some more insight into how he feels personally.
But there are unknowns, and the unknowns that apply to the health aspect create unknowns in the economy, and we'll have to keep evaluating things as we go along. I hope like crazy, obviously, that once suppressed, it doesn't come back, and that we readjust. But things don't always work perfectly. That doesn't mean there was a better course of action. I would not go around criticizing people at all for what they've done or anything of the sort. I just think you're dealing with a huge unknown, and I think that the degree to which it's disturbed the world and changed habits and endangered businesses in the last couple of months indicates that you better not be too sure of yourself about what it'll do in the next 6 months or year or whatever.
So yeah, he admits the entire economy and every business is at risk right now. And he ends it by saying, yes, you better not be too sure about what is going to happen in the next 6 months to a year and beyond. And regarding stonks, you should listen to the Oracle of Omaha. Looking at the Dow Jones, since a mid-March low, the markets have been pushing back up, right back to that 25,000 level, although it got rejected from passing that critical mark. I wonder why. Uncertainty and the fact that getting right back to the 30K level in the Dow would mean things are right back to normal. They are not. Everything has changed. The movement of goods, people, the flow of economies, the way people will spend, what they will spend it on, if they will spend it at all. But eventually Warren, he plays coy and does a great America speech. Let's listen.
And we found that nothing can stop America when you get right down to it. And it's been true all along. It may have been interrupted with the scariest of scenarios when you had a war with one group of states fighting another group of states. And it may have been tested again in the Great Depression, and it may be tested now to some degree. But in the end, the answer is never bet against America.
So I do not disagree with this. Betting against America long term is a bad freaking idea. But betting against America in the face of the next Great Depression test, aka the next collapse, is probably a good idea. Why do I think this? Well, pulling out the Dow Jones chart of all time since the 80s, something weird is going on with stonks. Rapid increases, which since the 2008 recession has absolutely become bubble territory. Which over the past 10 years, it reminds me of a story which happened in the past. Here in America, kind of, even before the creation of the good old USA, the story of John Law and the Mississippi bubble. So who is John Law? Well, he was a Scottish economist who lived from 1671 to 1729. Yes, way back in the day. And in 1714, Law befriended Francis King Louis XIV's nephew, the Duke of Orleans. And in 1715, when King Louis died, the Duke of Orleans became temporary ruler, while King Louis XV was still a baby. So the French economy during this time wasn't doing the greatest. The government was deeply in debt and taxes were high. So when the Duke of Orleans came into power, he sought the advice of John Law to help straighten out the mess left over by the prior king. By 1716, John Law convinced the Duke and the government to let him open a bank, the Banque Generale, that could do something for the first time in France's history: print paper money banknotes. This was a new concept, as physical gold and silver was money to the French before this. John Law's banknotes would be supported by the bank's assets of gold and silver, basically backed by that. And Law believed that the paper notes would increase the amount of money in circulation, which in turn would increase commerce. These conditions would help revitalize and rehabilitate the finances of the French government. And this was the beginning of the Mississippi bubble. By 1717, Law organized his second company, Company of the West, which would control trade between the Louisiana colony and France. And the colony of which Law controlled stretched for 3,000 miles from the mouth of the Mississippi River to parts of Canada. Law's territory included the present-day states that hugged the river, and the colony of Louisiana's connection to that river gave rise to the company's more popular name, the Mississippi Company. And trade between Louisiana and France was conducted in nothing other than precious metals like gold and silver, of what the Americas were known to be abundant for. Now, Law was given exclusive trading rights for the colony for 25 years. He would be able to appoint the governors and developers in turn for one thing, accepting a contract where he would transport thousands of settlers and slaves from Europe to the colony. Law, he needed money to do this, so he needed to finance the operation, and his plan was simple. Law would raise the money by selling shares in the Mississippi Company for cash and, more importantly, for state bonds. Law accepted a low interest rate on the bonds, which helped French finances while promising the company a more secure cash flow. Simply put, Law came up with a way to finance a big business scheme. And the lure of gold and silver brought out many eager investors in that Mississippi Company. A bubble in the making, you think? Well, Law's power expanded as the Mississippi Company grew, as he acquired trade rights throughout Africa, Asia, and beyond. And his Banque Generale became a state bank in 1718, which further guaranteed the banknote circulation and continuous issue within the French economy. In 1719, the Mississippi Company gained the rights to mint new coins for France, gold and silver, and by October of that year, it acquired most of the rights for the collection of most French taxes. By January 1720, Law became the Controller General and Superintendent General of Finance. Law now controlled all of France's finance and money creation. He also controlled the company that handled all of France's foreign trade and colonial development. Furthermore, by holding much of the French government's debt, he had created a stable source of income for future business ventures. This is when his scheme of issuing shares to expand some more reached a bubbling point. The value of shares in the Mississippi Company rose dramatically as Law's empire expanded. Investors from across France and Europe eagerly played into this new market. Shares in the Mississippi Company started at around 500 livres per share in January 1719. By December 1719, share prices had reached 10,000 livres, an increase of 1,900% in just under a year. The market became so seductive that people from the working class began investing whatever small sums they could scrape together. New millionaires were commonplace, and if you didn't know, the word millionaire is French and comes from this time period. Although the weak spot in Law's scheme was his willingness to issue more banknotes to fund purchases of shares in the company. Stock prices began falling in January 1720 as some investors sold shares to turn capital gains into gold coin. To stop the sell-off, Law restricted any payment in gold that was more than 100 livres. But those paper notes were made legal tendered by the French government, which meant that they could be used to pay taxes and settle most debts. The company was trying to get people to accept the paper notes rather than the gold. And then the bank subsequently promised to exchange its notes for shares in the company at the going market price of 10,000 livres. This attempt to turn stock shares into money resulted in a sudden doubling of the money supply in France. And without surprise, inflation started to take off. Inflation reached a monthly rate of 23% in January 1720. And the bubble, it collapsed. By September of 1720, the shares went into a downward slide. The fall in the price of the stock allowed Law's enemies to take control of the company by confiscating the shares of investors who could not prove they had actually paid for their shares with real assets rather than the credit. This reduced investors' shares or shares outstanding by 2/3. By September 1721, share prices had dropped to 500 livres, where they were at the beginning. This crash rippled into the entire French stock market, and within France there was a rush to not only exit stocks into paper money, but turn their paper money banknotes into gold coins, which led to bank runs of gold and riots. What is crazy, in the last 3 months of 1720, there was no sterling price quoted for paper livres, indicating they had become worthless as the public lost all confidence in them. These effects lasted for a long time too, as paper money banknotes, they were abandoned in France for gold and silver coins all the way up until 1776, when France reintroduced paper notes, a sign suspiciously the same year as the creation of America's continental currency. So my friends, if you don't realize the similarities between what governments across the world are doing, printing paper dollars backed by nothing, and giving those dollars to companies to inflate their stock prices, to what John Law did, I don't know what to tell you. Eventually, a stock run will come. The boomers, they are getting ready to retire. They are going to cash out. Do banks have enough dollars to fulfill a boomer stock run? And that is exactly why my views differ from Warren's. The stock market in its old form is done for, and the big one, the big bubble, will pop. And in my opinion, it's the companies that are able to adapt during the crash and realize the next wave of assets is on the blockchain. Those are the American companies you never bet against long term. Cheers. I'll see you next time.